John, it's great to have you on Floor Talk. Thanks for joining me today.
Great to be with you, Judy.
Thank you. So John, when you joined Citizens after its spinoff from RBS and its listing, what were your initial expectations for growth and potential challenges?
They were pretty significant. Our CEO, Bruce, at the time really, painted a very compelling vision for growth. And it took a lot of bold leadership in order to deliver on it. And there's a big kind of what were we like then versus what are we like now story that I think is really exciting. He sort of said, I'm going to be bringing a bunch of talented executives together and we're going to build a very distinctive brand. And when you think about how far we've come, when you go back to the IPO in 2014, we didn't have many capabilities. Our distribution wasn't very compelling. We had holes in our physical distribution as well as digital. We didn't have many deep customer relationships. And you fast forward to what we're able to do today. If I think about what consumers doing in New York Metro, where we are one of the most authentic brands in the city, and we're here today in New York, so that's very exciting. There is Citizens Green around the town, which is great. The commercial bank is also a great story where we've seen investments in the private capital space where a lot of banks look at that as a threat. We were ahead of the curve and sort of saw that coming. And so we've been making investments for the better part of the last 10 years. And then more recently, just staying opportunistic and the acquisition of all of those private bankers from Legacy First Republic has really created a significant amount of energy around this place. I mean, I think that's one category. The second category I'd add is all of our capabilities from a top of the house standpoint. We are one of the few banks that's going to be able to say that we're going to be 100% in the cloud by the end of 2025. We're already about 70% there by the end of this year. That is facilitating innovation and speed to market. We've got a phenomenal foundation financially with great capital and great liquidity. And, I think I'd just end with the last point about our culture of innovation that Bruce has sort of created, this ecosystem of learning and delivery, which is incredibly unique and just a stark difference in terms of what we started out with back at the IPO. And 10 years later, and it went very fast, through all of this investment, to be able to be sitting here with one of the most interesting and distinctive stories in banking is pretty special.
Now, Citizens has made headlines with its acquisitions, the launch of a private bank, and its entry into the New York market. How have these moves fueled your growth?
If you go back to the IPO, we didn't have very many distinctive capabilities. So there's sort of a then and now story. Back then we were very transactional, not very advice driven, not a lot of cross-sell or deep relationships. And then you fast forward to where we are today after an intervening period that went by very quickly, I can tell you, of investment, a lot of organic investment and a lot of M&A, smartly timed M&A, I might add. What we've done is created a lot of capabilities that our customers value. And a big part of that was the private bank from sort of an acqui-hire that we did last summer, as well as a large investment, almost 10 years ago, we started the investment in the private capital space in commercial. And then more recently, all of the benefits we're seeing out of the consumer bank really make up the three legs of the stool that we like to call it, where both commercial, private bank, and consumer are all contributing to significant household growth and significant penetration of commercial companies coast to coast.
Now, finally, looking back on the past decade, how is Citizens positioned for future growth? What macroeconomic factors do you consider critical for your strategy?
Yeah, I'd say that we're positioned to deliver across a number of macroeconomic scenarios. I would say that we've built a diversified balance sheet with a huge investment in consumer, a huge investment in commercial, pretty balanced at this point in terms of where the balance sheet is. We perform well when, with an upward sloping yield curve. That's a good typical place where banks perform well. We tend to transform short-term liabilities into term lending, and we have, that gives us the ability to invest in communities, et cetera. So an upward sloping yield curve is good, and it finally is upward sloping recently by about 20 basis points or so. The 2-year is now below the 10-year for the first time in many years. So generally, we can perform well across a number of scenarios, but we like the rate environment that is more normalized and with, of course, vibrant economic activity where a rising tide will lift all boats.
Well, John, it's been wonderful to talk with you.
Yeah.
Thanks for joining me on Floor Talk today.
Yeah, great to be here, Judy.